So we believe that the bigger risk here is deflation. And there are three reasons for this. Two are secular, one is cyclical. The secular reasons, one is good and one is bad. So we are experiencing today the biggest uplift in innovation. We're in an innovation age, the likes of which we have not seen before. And so in mid-February this year, as we did our 5-year forecast, and we assume massive multiple compression during the next 5 years to something like FANG multiples, EV to EBITDA in the 18 to 20 range. When we did that in February, at the peak of our strategy, the compound annual rate of return we expected from our portfolios was roughly 15%. Today, doing that analysis, some of our projections have increased. The compound annual rate of return we are expecting is close to 40%. So in February, we were expecting a doubling over 5 years. Today, we're expecting nearly a quintupling over 5 years.
Cathy Wood. She just doesn't know when to quit, does she, with her perma-deflation is always just around the corner mantra. She's been wrong on inflation for well over a year, and thus investors in her ARK garbage ETFs continue to pay the price. So here's another warning to all you hodlers out there of such tech stocks and funds, the likes of which populate Cathy Wood's ARK ETFs. The price drops today may not even be halfway done. You know how much garbage is out there when analysts stop following the fundamentals and pluck metrics out of thin air, such as Cathy Wood harps on about. Don't look at earnings, don't look at dividends, look at some made up garbage that quants, or I don't want to use the word I'm going to use, I've just plucked out of the air. For instance, price to earnings is the primary metric, but for many stocks that populate the likes of Cathy Wood garbage funds does not work. So what do they use? Price to sales, price to users. What users for in India? What they don't know revenues from. Price to cotton buds in the CEO's bottom drawer. How many cotton buds has he got piled up down there? Or how many toilet rolls has he stocked up for? Is that how they're measuring these stocks? Price to earnings. If the stock has no earnings, then well, it's at risk of going bust. So tread carefully no matter what the price to sales and other such garbage metrics that Cathy Wood plucks out of thin air imply. Cathy Wood, the sales queen, days ago was saying her ARK will 4x over the next 5 years. 4x, you crazy cuckoo. What, from a bottom of what, $10? ARK falling from what, $96 to $10 a share to what, 40? Is that what she meant? Because it's not going to 4x from $100 or from where it peaked, 160. What figure is she using for this 4x? I presume it's 460 from 160, no? Is it from 100? Is that what she meant? Because I watched the video and all she said, she expects her funds to quadruple. But not from what level. ARK was trading at $105 when she spoke. Today it's what, 96, 97, 98, something like that. I have not looked. In the not too distant future, ARK will be trading in the 70s. Cathy Wood is a salesperson, not an analyst, and her funds are all about generating hype for retail investors to FOMO into. So buyer be warned. Don't buy the hype. Don't buy the FOMO. Well, there is no FOMO with Cathy Wood. Her funds are on the fast track to falling by another 50%. You know, 105 when she spoke, so 50. That's where they're headed, probably even lower. So you have been forewarned again, just as I warned in late February 2021 when patrons asked me to take a look under the hood at ARK. Is it good? Is it bad? And at the time, I took a look at what she was holding in the ARK funds, and as I said at the time, I literally puked. and stated right at that time that these are garbage ETFs. If you're invested in this, you're going to pay a heavy price no matter what the general stock market does. It might go up 20%, sideways, but whatever it did, this is what I was saying in early February, you're going to lose money now, because these are garbage, trash. These are not even high risk stocks, they're garbage stocks. Trading no earnings. They're not even using proper metrics to measure the company. She goes on about it's innovation, disruptive innovation. That's how we're measuring them. We don't measure them by normal means that sensible investors use. No, it's innovation, disruption. It's going to collapse, crash all these other industries that are earning money. It's going to crash them. Well, the only thing that's crashed is your value of your funds, you sales queen. So there's another warning. She doesn't know how to invest. She got lucky. She plucked some stocks out of thin air, garbage stocks, then FOMO'd them, pumped them through sheer hype to get all these gullible retail investors to pile in late. That's what's happened. And you pay the iron price, as my subsequent analysis to this one points out, that most investors bought ARK funds not at an average price of around $120. That's where they invested, if you analyze the volume. So if you're probably watching this and you invest in ARK, you are definitely losing at $100 or less. 120 is probably your break even or around that. That's my analysis. If you invested well, you can forget about ARK going back above 120 anytime soon. Not for years even. You might, in fact, on this current rally, you might even consider cutting your losses, because it's got the potential to halve again to 50 or even less, 40. So that's my another one. If you listen to my, you'd have to be a patron. If you listen to my warning late February, you would have got out probably, let me have a look at the chart, around 135. Yeah, around 135, which would probably, if you were invested that time, you'd probably in the money, maybe. Now it's too late now. No point crying over spilt milk now. And what we've got now is a technical bounce. Stocks don't continue to move in a straight line. They do bounce after a break to a new low, which is what Cathy Wood's funds just did. So that's my another warning. Do not blooming invest in garbage funds. And this video is an excerpt from my recent in-depth analysis that acts as an early warning of the increasing risk of a market panic event. That was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month, which is nothing for what you get access to. Imagine if you'd bought those AI tech stocks piled in all available cash mid-March 2020. How many times? 140% gain. Something like that's the average gain since on the portfolio. $4, nothing. And you also gain access to my recent extensive analysis and it's epic. Took me a good 2 weeks on how to capitalize on the metaverse, which is basically another word for VR and gaming, but they now call it the metaverse. Something that I've been banging on about for years, but they call it metaverse. It's VR and gaming. VR is going to be big. It's the next evolution from smartphones. And Facebook changed their name to Meta because of that. Because Facebook want to make sure they're positioned for the next big revolution, which is the shift from smartphones to virtual reality headsets. There's augmented reality, but I think that's going to be a stopgap along the way. Anyway, that is extensive analysis, as you can see from this list. that has been again first made available to patrons who support my work. So do consider becoming a patron for $4 per month, and then you also get access to my other extensive analysis, which is on AI tech stocks and their buying levels, both current and the one I did a few weeks ago, all come together to present the current state of the tech stocks portfolio, as well as lessons, investing lessons, Bitcoin and the crypto markets, and of course I've extensively covered the implications of the inflation mega trend. I've been warning for over a year to expect high inflation and what you should do to capitalize on it, such as, for instance, if you're going to buy a big ticket item, do it now, sooner rather than later. This is why I bought all of my big ticket items before this surge in inflation. Anyway, all of that was first made available to patrons who support my work. So do consider becoming a patron by supporting my work, which is $4 a month. And my schedule of analysis includes a look at the housing markets, UK, US, Canada, China, because if you're not aware, China property market appears to be collapsing, but data out of China is weak. But the likes of Evergrande, which rather than being the canary in the coal mine, is the coal mine, just exploded. And I've been warning of this since July, of the risks of financial crisis 2.0 that is now starting to become manifest. And my extensive analysis on how to get rich, real hardcore analysis that I've been working on for a good 9 months, that I aim to post this month, which will be exclusive to patrons only. And of course my latest analysis, which is on the high risk stocks portfolio, a quarterly update of where they stand and what I'm doing and what I'm going to do in terms of limit orders, positioning to profit from the unloved biotech sector mainly, and some meta stocks in there as well, small time stocks. Then further on, I'm going to be looking at the US dollar, British pound, and maybe gold. You want to be in cryptos rather than gold. Anyway, all of that is my forthcoming analysis. So do consider becoming a patron by supporting my work for just $4 per month. I hope you enjoy the Christmas holidays and you don't get too disrupted by Omicron noise. But I won't comment on that because you know the way YouTube is.
Should old acquaintance be forgot and never brought to mind? Should old acquaintance be forgot and all lang syne? For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne.
Yeah, the reflection.